afternoon. How are we all doing? Sorry, I was watching the chat and I suddenly saw David's $10 come up. So I thought, I'll find a quick graphic for you. The man, the myth, the legend. Thank you, David. Very much appreciated. $10. It's a good way to start the stream. Thank you very much. I assume my mic's working. Yeah, I haven't checked. Good. How are we all doing? Afternoon, Fletch, Callum, Crum, David, of course. Thank you very much. Much appreciated. That will pay for one starter tonight because I'm going out for dinner because my son got his GCSE results today. So, yeah, there we go. That's probably about what it will get, a starter. Afternoon, Monkey, Harold. So, busy day today from news perspective, but not a lot of busyness from the market, unfortunately. We've got two ADRs. One of them is a yen. So not a lot happening really, is there, at all? This market is dead as a doornail at the moment. This morning, I traded the DAX at the open. Weird. Just weird. Price action. Look, you can see it on the chart here. I do not want to buy Epic Pen. So, yeah, that was your pre-market. That was your open. Very big, strong open today. Pre-market range was far too small, but took the break of the 5-minute opening range. Then we got this whacking great gap up and then complete collapse back down again. So got out of that with about £250 this morning on the news. So basically that was news. So this morning we've had news all morning for PMIs. We've had the Europe, the French, the German, the British, and we've got the US coming up after open. So French was a mixed bag, manufacturing down, services up. Germany was both down. The pound were both up, but very marginal, not a massive one. Unemployment claims came out as forecast. And we've got the PMIs for the US this afternoon. Today's also the first day of the Jackson Hole meetings. So we've got Bailey talking tomorrow. We've got Powell talking tomorrow. So it could be a very busy couple of days with Jackson Hole on, but that is really a case of what we get coming out in between meetings. So it's very hit and miss. But yeah, those PMIs today, nothing. So the Euros, as you can see, so far today, we got, that was the news completely undone. We then got the Euro CAD news down, faded back up again. Euro pound has come down hard because the pound has had a rally off of the back of the positive PMI figures. And obviously the Euro's PMIs were ever so slightly weak. So the Euro pound's taken advantage of that. And we've got an ADR. So that is your only ADR hit today, is that Euro pound. And it's taken 3 lots of PMI figures to get it there. Just no volume. So that one's come down quite hard. So you've got potential opportunities on the hourly and the 4 hourly just about to come up. So the 4 hourly is just about to get extended below that 20 level on the RSI 10. So good mean reversion opportunity on that one. The only other RSI extension we've got is the Swiss yen, which is above ADR, but that peaked yesterday in a similar sort of fashion. It was more of a wick. Above that weekly high and rejected. We hit the weekly high again and rejected this morning. We've just pushed through it on the sort of the last 4 hours, so off the back of that news. But if you look at all the other yen pairs, they're all pretty middling, not really doing much. So this kind of tells you it's a little bit of Swiss movement in there as well. But really, just not a lot happening today. Dead. I was expecting PMI day to be busy, and it's not. It's really disappointing. But hopefully we'll get a really massive figure on the US. Harold, thank you very much for the £20. Very much appreciated. Hope your lad did well in his exams. He did. £20 for both. I shall give him a tenner. He's just got 20 quid from his grandmother as well. Anyway, yes, he did do well. We got everything we needed to get him into college with the course that he wants. That's all that we needed. So B's, well, in old money, in my money, it's all B's basically, and one A. In new money, it's all sixes and sevens. They've changed it all, so now it goes from a 4 to a 9 or something. Or the old scale we used to have, A to F, doesn't exist anymore. 3 different numbers make up a B or a C, somewhere around there. But it's all good. Anyway, so thank you very much, Harold. Much appreciated. So there we go. So now I've got 3 starters. There's 4 of us going out for dinner. So I've got 3 starters for this evening. Thank you. How'd the news trading strategy go during the London session? We'll have a look in a sec. I'll cover that in a minute. As Pot DJ just said, hit the like button. I don't know why that comes up so massive now. But anyway, don't be a bum, smack the thumb. Hit the like button, people. Let's try and get some numbers in. We've got 30 in at the moment. Should have 30 likes. Afternoon, Brian. So there's your news so far today. We've got 6 minutes until the open. The open today, I suspect, is going to be fairly lackluster. The FTSE this morning, we had a massive move on the FTSE this morning. I don't know where that came from, but I didn't take this because it was, I think it was 83. Yeah, it's about 80, somewhere between 80 to 83, the range. Minimum is 10%, which is what I like to trade, a minimum 10% range on ADR. It was 85. That was, I mean, in that 5-minute opening range candle, you put in 250. So that's pretty much 3R, literally in 5 minutes. So if you did take the pre-market today, well done. Big profit there. But obviously it just came straight back and undid the whole lot. So we'll see what we get at the open today. So we've had 2 big volatile opens this morning on the DAX and the FTSE with PMIs. So hopefully the US markets will follow suit and we'll get some decent breaks today. So we'll see where we go. So that's your scheduled news. The danger today is obviously with the PMIs coming out at 2:45. We're going to sit around for 15 minutes at the open and wait for the PMIs to complete the break, which is not a problem if we don't get entered into any trades at the open, but we will see. So it might be a hideous day today. It might be a really good one. We'll have to wait and see what happens at the open. Other news overnight, we've had a load of confusion at the Fed, which is partly why I think we've not done much today. Pound odd ADR. We just had an ADR hit on the pound odd. So this pound's really rallying away today off the back of those PMIs. They like those PMIs. So if you look at the US dollar today, probably US CAD's the only thing really that will tell us what's going on. As you can see, we've had an absolute ton of nothing today. So we opened there. We dropped during Asia. We came up, we've tested it, and we're just sitting around. So the US dollar basically last night, FOMC, we literally got confusion. So after the Fed coming out and saying we're not changing interest rates until 2024, to we may be changing them in September, to we might put them back to 2024 again, to holy cow, we're going to change it in July and it's going to be 1.25%. Last night, we got the vast majority of positions said it would be likely appropriate to ease policy if the data comes out as expected. So they've now shifted over to, we'll have a look at CPI. So several participants said recent progress on inflation increases the unemployment rate, provided a plausible case for a 25 basis point cut in July, which they decided not to do. So we would be looking for September, possibly for a 25-point cut if CPI doesn't bounce between now and then. So it's a complete U-turn on the, we got to get 1.25 off the interest rates by the end of the year, to now we might do 0.25 in September if CPI does not pop. If CPI pops, we're not even going to do that. So the Fed, again, really shifting their stance from, yes, we're bearish to, oh, we're a bit cautious again now, 3 weeks later. So everybody seems to think they are going to drop interest rates. Everything is weaker than expected with the labour market. So the upshot was basically indecision. This morning we've had Schmidt come out and say we need to see more data before supporting a rate cut. So again, confirming what was FOMC's statement last night. It's not quite going as well as we thought, guys. So as for what the hell is going on with the US, we don't know. There you go. Collins has come out this morning as well. When was that? Half an hour ago. And said it is soon appropriate to begin cutting rates. Soon could be the next year, the next month, the next week, or the next 6 months. Doesn't help us any way, shape, or form, does it? So, yeah, good luck forecasting where that's going. Market opens in 45 seconds. So that's your overnight news. As I say, the only real service news we've got this afternoon is the PMIs, which are coming out in 15 minutes. Got existing home sales, and that's pretty much it for the day. So a bit of a weak day today. Few ADRs. Pound is the main winner today. Those PMI figures, it really likes them at the moment, but not that much. Not enough to get an ADR. So yeah, RSIs we'll look at in a sec, but as you can see, not a lot to look at. We'll have a look at the hedging strategy in a minute, and I'll cover what happened with that yesterday. Seeing as Callum decided which direction we were going yesterday. No pre-market ranges today. So pre-market range is 222, minimum is 363, which is 10% of ADR. 34 on the Dow, need 44. 43 on the S&P, needs 72. No pre-market volume to trade, so waiting for the open. So we'll see what we get at the open. Very, very good open at the moment. A lot of ticking, a lot of volume. So hopefully we might get some movement. So I'm looking for a minimum of 36-point open. We got 30 odd there. So Nasdaq's definitely going to be a trade. Dow is still short of the range, so we're definitely going to get a Nasdaq on, which is good, and looks like an S&P as well now. Not quite. Good volume today. So this range that's forming now just need to be a little careful because there's a lot of volatility coming through this morning. So what we don't want to do really is get hedged ahead of the news. I don't mind going single direction ahead of the news, and then obviously it's down to the news whether we make money or not. But ideally, what I would like is to sit on a 2 inside bar inside the opening range ahead of the news at 245. So just need 3 candles basically. 2 inside bars, and then obviously the news will take it. But we'll see where we go. Come back to that in a sec. So RSIs today. Afternoon, Julian. Blue Trader. It's sunny in Spain. Good. It's peeing down with rain and blowing a gale here in the UK. You'll be pleased to hear. You should be able to upgrade the Big Mac account to a Whopper account. I know. It's good, isn't it? I'm going out for a Turkish tonight. So they don't do Big Macs or Whoppers. But anyway. Afternoon, AZ. So RSIs, you've got 3 hourlies, which are just about extended. Pound US, pound odd, and euro pound. So this is extended and embedded. As we know, the pound has been very good and the US dollar has been very weak. Third entry taken on pound US yesterday. So average is 125 ADR. Looking for a pullback on that. So loads of downside available. But that's still extended and embedded. Pound odd also extended. That's the ADR hit today. So we're approaching weekly highs. So, whoop, 1 too many. Just coming up to weekly high there. So good opportunity for limit order triggers there. So that is an ADR mixed with a weekly high, mixed with a multiple weekly high level. So we know that the market is selling that level, has sold it twice. Limit orders seem to be triggering at the moment. So we'll see if that pound's got any more left in it today. But if not, you're looking for a good play back down into there. So that's an RSI extension. You've got divergence on RSI as well. And it's an ADR hit to the upside. So drop down M5, wait for some signal of strength, weakness to come in. You're not going to get a reversal on that until you've broken this last 20-minute rally. Look at that. Limit orders at weekly highs and lows. They are always there. Whether or not they hold up is down to the volume going into them, but they're there. So good extension on RSI, good extension on ADR. Your entry is going to be a bit tricky on this because it's been rallying so hard into it. So if you do see a bear candle come in now and then a bull candle push back up into that candle, that's a good short from there. If you want to use a stop, really tight little stop there. So we're looking for that M pattern formation on the reversal. And you've got Euro Pound, which is also a 4-hour extension about to happen. That is now extended on the 4-hour. So I'll be able to get into a trade on that today. Nice looking support area coming up down here. So that propulsion gap here at 175 ADR is the break up into that ridiculous rally that we had at 300 ADR. So if that doesn't work out, that's a good point for a second entry, which is 3/4 of an ADR away. Failing that, you got double monthly lows coming up and last week's low, which is around about 300 ADR. So you probably have, if this continues to drop, i.e. the pound has got to continue to rally, you'll probably be in somewhere around about 4 positions on it by the time the pullback gets underway, possibly. So those are your hourlies. Short on the NASDAQ. No trade on the Dow. It's over 20% of ADR. The Dow's done. Look. 100-point move at the open. It's too big. Going to find it hard to get a risk reward on that. The reason that 20% maximum is set, as you can see, there's your range. To get a really good long-term return, you want to be targeting a good 2-3R on the range. 3R is above ADR. And we know that the vast majority of the time the market spends within ADR. So it makes it, when you get over 20% of the ADR of the instrument at the open on that 5-minute candle, makes it very hard to achieve a 3R target because the market's got to really rally for the day. So no trades on the Dow today. S&P is an inside bar. So no break on the S&P yet, but short on the NASDAQ. Right, we've got 8 minutes until news. So those are your hourly RSI extensions. Good rejection at ADR there. Look, this is an ADR as well. You've already had the reversal alert on this, and that is the retest going on at the moment. So beautiful entry right now. If you do want to use a stop, absolutely tiny stop and huge upside. So that's your hourly RSI extension. 4-hourly Euro Pound is also extended now. I'm looking for 80-20 ideally. So we have just got that extension. So next long move on that, I shall get in if it continues to sort of stay down in this area. Pound US dollar is also extended. I'm already in this with multiple positions. This is extended and embedded above the 80. It's just not stopped all week, literally not stopped. US dollar's been weak. Pound's had a really good week for news. It's not stopped. Didn't stop last week either. And with the Fed coming out potentially dovish, it's got more on it, I think. but it's probably going to want to pull back. So let's hope we get positive PMIs this afternoon. Green numbers for the PMIs will drive this straight back down again. So I can adjust my target on this as well. So third position is on that. So I'm going to target 200 ADR. We're not going to hit that today, but that is where I'm going to head. So looking for that little accumulation there. Makes more sense on an hourly chart. So that's the most likely spot I think we will come and test. If you look at it, if I zoom out a little. So that weekly high, it just kind of bowled through it, tested it and went. That accumulation there with that break is probably where we'll come and test. But I'll be happy to get out on this one. I'm in 3 positions on it. Not the end of the world. But if they're not going to increase that, drop that interest rate on the US, everything's going to start to get a little bit more bullish against the US, I think. Bailey hasn't come out and confirmed on the pound yet whether or not we're dropping interest rates in September either. So if he comes out in Jackson Hole and says we need to see more data, we've had a bounce, it's unlikely we'll make a change next time round, we're going to get a slightly bullish move on the pound. The Fed have come out and been a bit dovish. We're going to get a slightly bullish move on the pound US dollar. So there's a good chance this one could actually push a little bit further. So we've got we're there already. I was just going to say we've got an old level we're approaching. It's within ADR today. Didn't realize we're that close. So that is your July 2020. Where are we? 2023 high. Yeah, beautiful yearly level. Again, there's always orders sitting at the yearlies. So we'll see where we go. That NASDAQ rather, as well. If you look at where we are on the NAS, we're kind of getting stuck here. We got stuck yesterday at this level. And we pushed into it and rejected immediately. So it looks like they're attempting a push out of yesterday's high and not making it. So I think there's a good chance of that short coming in. But again, positive US news will drive that down. So would like to see some decent PMIs today. Inside bar, there we go. So we have got the inside bar on the S&P. We're putting an inside bar on the inside bar. So it's a 2IB setup at the moment. If that can stay within that inside bar for the next 3 minutes, we've got a chance of a very nice profitable S&P trade on the news, assuming we can get filled and not slipped to the ends of the earth, which happens. So yeah. Your only other extension is US dollar CAD and the 4. Got 2 positions on that one. I'm going to target that. Just move my target down on that to propulsion. Looks like a bit of Canadian dollar weakness coming in. No. I don't know what that is. US strength by the looks of things. So it looks like they're buying into the PMI figures before they're released. We've got 3 minutes. Big move going in there. That's unfortunate. I just missed third entry on that today, unfortunately. Which would have been nice because if that had been third entry, that would be average. So the PMI push up to 125 would have got me into a nice profit today, but not to be. So there you go. There's your RSIs and ADRs. We'll watch and see where we go at the open. Afternoon, Yusuf. Have you tried to test the RSI2 on indices as long only? I haven't, but I don't need to because that is the original strategy. That is Larry Connor's original strategy. That's where it originated from. Larry Connors used to buy the RSI2 long only. That's the whole strategy. So yeah, it works um, on stock indices. Or rather, it did work on stock indices. I haven't tested it recently, but it used to work. But since COVID, these markets are absolutely 100% different to what they used to be pre-COVID. So I'd go and test it basically. But the basically is RSI2 extended to the downside. You buy it. If it carries on, you buy it. If it carries on, you buy it, and you wait for the pop because the indices go up. They used to go up, but you look at, we've got 1 minute to the open. You look at the S&P now and compare it to pre-COVID times. Yeah, this is the largest bear volatile run we've had in history. That COVID spike sent the market into overdrive, fastest bull run we've ever had, followed by the fastest, most volatile bear run we've ever had, followed by, what the hell is this? This is not what we used to have before COVID. Neither is that, and neither is that. So his strategy, RSI2 pullbacks for the S&P 500, used to work from 1980 something to COVID. This is not the same. I haven't tested it, but it is still doing what it always does. It goes up, apart from when you get a bear volatile year, but that's what it does. So in theory, it should work exactly the same. But you can always go and test. But we are in a very different place now. Okay, gap up on the S&P, gap up on those. Does look like positive PMIs to me. It looks like their target, to be honest, actually. 55.2, so we're one point up on services and 1.5 points down manufacturing. So it's the same as we had it this morning. It's neutral. So that could go anywhere today. God, look at these wicks. Not a big reaction at all. What a letdown. The markets are just a letdown at the minute. So it does look like it wants to break short. So the market overall looks slightly positive on the US dollar. Yeah, so it's positive US. But not massive. Not really a big move at all yet. Give it some time, might kick in. So let's see if there's any new futures positioning. Peloton shares rise more than 15% as a turnaround plan takes hold. Losses shrink. There you go. People buying Pelotons again. We've got Harker saying some stuff. End of easing cycle may put funds rate around 3%. Not where you want to be. Ready to start process of cutting rates. Unemployment likely to rise just below 5%. Inflation is moving down, but will take time to get to 2%. Yep, it's not moving down, mate. It's going up. You got that wrong. Maybe I should go and work for the Fed. Come on. So US. Oh no, sorry, no, you are right. He's right. I'm wrong. What was I thinking of? Euro and pound. Yeah. So we are down 2.9 now. So we did drop by 0.1, but they want to get to 2. So this is basically what they were talking about overnight. This is not getting where they want it to be. So the next CPI release that we have, if it's bullish, they won't change that. So if that comes out at 2.9 or above, we won't get that cut in September, I don't think, which means we're neutral to slightly bullish for a month or so on the US dollar. So that basically, those PMI figures feed into CPI. So the Purchasing Managers Index feeds into the Consumer Price Index, which feeds into interest rate direction. It's neutral. It's not bearish, though. That's the thing I think the market's taking away from this. These numbers, if they come out as red, would indicate CPI will probably drop again, which means that interest rates will drop. What they're probably reading into that is it's not likely inflation's going to drop very much, is it? So therefore, it's slightly bullish. Short on the S&P. Dow didn't like that at all. So if you did take the ORB on the Dow, you are short. You didn't get triggered long. I'm thinking of, rather than using SIH or the ORB EA, I'm thinking of potentially moving back over to the Price Action Toolkit to trade the indices for the minute, just while summer's a bit crap. Just because I want to see how much volume is there, not just price action, and make decisions based on what I'm seeing on the charts rather than the opening range breaks at the moment, because the opening ranges we're seeing are absolutely all over the place at the moment. Some days we've got loads of volume, like this morning on the DAX and the FTSE. Some days we are gapping the 5-minute candles because there's absolutely no orders to fill. So I want to kind of go back to semi-manual, I think, during the summer. I think that's the best option to do, because at the moment it's just a lottery, isn't it? We're getting this a lot. Then you get the odd news event, but if there's not a news event, there's a lot of rotation in the market at the moment. They're not going anywhere. So short NAS, targets to the downside on the NAS. Pre-market low today. So that's the Globex low. Looks fairly decent spot to target. And then yesterday's low, if it is going to break down, would be T2. S&P, Globex low, yesterday's low. And you've got the previous day's low there as well. So there's a support area there on the S&P to the downside. But as I said, that looks like the rejection of yesterday's high. And that rejection of yesterday's high on the NASDAQ is also that accumulation before the breakdown. So it looks to me like we're just hitting this area we sold from, which is basically price discovery failure. And we're just basically retesting that level. So there's a good chance we're going to start a pullback on this, which also potentially makes the market bearish. Got to be careful. The US is not out the woods yet with inflation. And if they don't drop those interest rates, the US dollar is potentially going to rally, which is going to hold the stocks down. But we will see. Right. Anybody got any other FX pairs they want to look at? Let me know. Other than that, I will look at the other strategy I was trading yesterday. Position short on EU at the moment. I'm short as well. So I'm short from there on Tuesday. Second entry yesterday. Didn't get a third on, unfortunately. Price action was too fast. So looking to target the propulsion break of the double top, which if market structure is going to continue long, that will be a pullback area. However, after those figures today, we might get a bit of a rally on the US. Absolutely no reason why we shouldn't be testing that area. But yeah, we'll see. Morning XR update.news. Late to the party, afternoon, Mumo. Why is everybody late today? I hate it when I just miss out that extra entry before it crashes down. If we knew they were coming, we would do them. That's a beautiful 2 IB break there. So one of the candlestick patterns that the Price Action Toolkit trades is a 2 IB setup. That's a perfect 2 IB there. So in this case, you would have had a 2 IB. Well, it depends how you trade it, but the 2 IB, you either trade it off of the inside bar or off of the original bar. There's no right or wrong. Sometimes that's the best one to use. Sometimes that's the best one to use. Occasionally, you could take that one, but that would have been a whipsaw. But yeah, 2 inside bar break, which is on a 1 minute time frame. You'll find that paints a symmetrical triangle contraction, and that's the break of the contraction. Oh, look at the wicks today. What a mess. So NASDAQ basically, yesterday's high rejection and pre-market high rejection. Then we got an inside bar followed by an outside bar, all with massive wicks. Followed by the news with a massive wick. What a load of rubbish. Good luck price action trading that. Right. Did the hedge? How did the hedge go we voted for? So basically, yesterday I managed to bank 167. So that was the hedge that I took yesterday. So shorted the pound, longed the euro. So towards the end of the day, or what time was that? 8 o'clock, 6 o'clock. Yeah, so end of day yesterday for me anyway. Closed out the euro long and did some drawdown control on the pound. So reduced that lot size down. And then took another trade on the pound. I was thinking, I've suddenly did you hear that massive penny drop in my head? Yes, that's why that does that. Right, so how can that work? Can't do this with the position trader EA. It's going to have to do this with the price action toolkit. So basically, that move there and that move there managed to bank 100 and whatever 67 or something yesterday. Yeah, $167 yesterday. So up 4% on the month. Haven't traded every day, but up 4% a month. So basically, as soon as those trades are exited, because obviously I had a position left open, I had to re-hedge it. So added a second position there, and the first position again that way on the euro. So euro US dollar long and pound US dollar short. The problem I've literally on stream just realized is because I'm using the position trader EA, additional trades, as this is now classed, are taken at the same lot size as the original. What should have gone in there on that short is a larger lot size. Yeah. So the original lot size taken yesterday, and I can correct this now because we're just about to hit it. The original lot size taken yesterday was 0.4 on that, so 1.39. So I need to put another 0.4 on that. I need to use fixed lot sizing, don't I? That's the only way I'm going to be able to do this. Which isn't really a problem. So I'm going to go with 1. Let's just go 1.4 there. Except to right now I need to place a 0.4 in this instance. And then on that one, we're going to need to go 0.85. That's going to give me roughly $1,000 risk over 1 ADR. Hasn't kicked in. Just shut up. 0.6. Right. So that's now got the correct sizing short on. It should have been the same size. So yeah, basically what we need now is some US dollar movement. The problem we've had today, and this is what I said when I took this trade, when I was going through the strategy yesterday. The problem with this strategy is the whole premise of it is hedging the US dollar. So the reason we took this trade was because we had US dollar news coming. What happened in the FOMC? Absolutely nothing. The dollar didn't move all day long, and then during FOMC, the dollar didn't move. So what has happened is the pound and the euro have moved independently, which puts you into a slight bit of drawdown, which there's nothing you can do about. So what we've now got on is the same principle. We're waiting for US dollar movement, except we've got a 0.7 drawdown to deal with. So it doesn't matter if the US dollar rallies now or the US dollar dumps now. One of these positions is going to start to go into profit. Yeah. If the pound suddenly drops at the same time the US dollar rallies, the pound US dollar is going to come down a lot faster than the euro US dollar, and that is going to get us out of the hedge. So we're just basically playing, waiting for news on these three currencies. So, but the whole idea of the second day, if you like, after you don't manage to get out of a hedge, is you need to put the same size on again. So you're going to whittle this trade down and away with all the profit you make. So every time you make some profit, you get rid of a bit more, you get rid of a bit more. And these hedges will just continue to some days play out, some days not. So it will build up drawdown. This is what hedging is. Hedging is basically negating losses. By negating losses, the only thing you can do is turn losses into drawdown. It's hedging. That's the way it works. So yeah, so it's re-hedged basically. We're just waiting for some US dollar movement. But that is exactly the same as I had with this one here, where I can't. Yeah, no, it's this one. No, it was that one. So you can't see the day before, but the day before that one was zero profit as well, basically. So because we got into one, we closed out half a hedge. We took about $300 or $400 profit out of it. Then we had some left on, and the next day we managed to close out the whole thing at $243. So what I'd like to see now, absolute ideal scenario, is the euro having a rally this afternoon and the pound having a dump this afternoon. That will disappear immediately. And then if the US dollar wants to kick in as well, all the better. We don't care about the US dollar at the moment now because we're just concentrating on the pound and the euro. But tomorrow might be a different case. So just waiting basically for movement, the market to decide what it's doing with each of them, and then we'll deal with it. But the only problem is obviously with hedging, with this type of strategy, if you don't have any profit, you can't bank anything. So you just have to wait for these to come back into profit. And if you think about it, all we're doing is we are position trading. We are position trading on opposite directions. So we are basically, as you can see, having multiple US dollar exposure on at all times, flanked by euro and pound. So if that drops, we're going to make money. If that pops, we're going to make money. If that pops or drops, we're going to make money. It's just the amount we make will be dependent on the movement of all three positions, all three currencies. And these are obviously the biggest traded currencies on the planet. So I was watching an interview earlier today. You know, I banned around that figure of $7 trillion a day that goes through this market. Nobody knows where it's come from. I was watching an interview this morning with a Citibank trader who used to trade on the Forex desk, and he traded on the short-term interest rates Forex desk. So he was trading Swiss franc, yen, and euro. And I was watching an interview with him, and basically he confirmed lots of stuff you'll hear me talk about in the bootcamp, because he's a banker, yeah. And my whole bootcamp is based on the premise of what goes on inside banks, which is why we do what we do. But it was interesting to hear him say that his desk used to trade on average $1 trillion a day. Yeah. So when I say this market has roughly $7 trillion a day going through it, Citibank, there's only 10 institutions on this planet that have got enough volume to move these markets and make these tick. Citibank is one of them. He used to, on his desk, trade $1 trillion of the $7 trillion a day. Yeah. So that just shows you how much money is going through it. And all he was doing was short-term lending. Yeah. Daily lending in and out. So lending against the Swiss, the yen, and the euro. And that's basically what I keep explaining about what happens in banks. The mechanics of banks are commercial orders. Vast majority of the orders that are going in to make this move are commercial orders, and they are just being placed in the market and a commission taken by the bank, and it doesn't matter which way it goes. They don't care. A lot of that money that they make is then used by short-term interest rate desks to manufacture more income. They don't care which way it goes either, because they're giving a loan out, so they're buying at one level and selling at another, guaranteed to make money. These guys on these desks know what orders are going through today. So the speculative desks for FX, who are using the bank's money to make money, have a good indication which way it's going. And these are the guys that take the profit. Yeah. So again, confirmed everything that I've said. And also in that video is interesting. He said something about, he was talking about life in the bank, basically, and going out partying, going out restaurants and clubs and all that sort of thing. And he'd say he'd come to the end of the day at sort of 5 or 6 o'clock, and he'd say, I don't care what happens after that. I've handed over to the whatever desk. They're doing the business now, and they'll close up and hand over to the other desk. What do I say in the boot camp? Asian session builds a book, hands it to London. London drives it in one direction. London closes, hands it to New York. New York drive it back down, close, move over, rinse, repeat. 3 sessions, 3 desks, 3 trading offices, basically. So again, it's interesting hearing somebody else confirming everything that I've been told that goes on. So it's a good video. I can't remember what it's called. Don't ask me. But it's a bald guy. He used to work in banks. It's not Tom Hugard. He used to work in a brokerage. Why not position trade your way out of the loser instead of really hedging it? Because it's a hedging strategy, easy. The whole purpose of it is it's hedging. And it's Callum's fault because he decided what we were going to trade and which direction. It doesn't matter which way you'd have gone, Callum. The same outcome would have happened because the US didn't move. A thought, would it not make sense to trade this hedge strategy with a strength meter? No, because the strength meter has just told you what has happened. It's got absolutely no. This thing is the most useless thing on the planet, right? In fact, before I look at it, I'm going to tell you what it says. So it's going to tell us that. Trouble is, it's probably going to tell us not a lot moving. Right, it's going to tell us that the Aussie dollar is weak, so it'll be below the Aussie dollar line. Will be below a load of others. It's going to tell us also. It's not doing anything, this market. It's going to tell us that the pound is strong. Yeah. It probably won't have the US movement on it because it's too recent. But that's what it's going to tell us. In fact, it's from this morning, so it probably won't tell us that because they haven't released a new one, have they? So this line here is the yen. Where's the Australian dollar? Dark blue. It's down here. And the pound, this is yesterday's, is heading up. So pound strong, odd week, but this is yesterday's data. The strength meter that's going to come out today, when they finally release it, a bit later on, will tell you that I've just said. And the reason the strength meter is useless is because it tells you what you can see on your chart. Yeah. So this thing here, right now, is flying up. Do you think the strength meter for the US dollar is going to be at the top or the bottom? Yeah. Absolutely no use to you whatsoever. Knowing what has been strong doesn't help you forecast the future. No indicator, and all a strength meter is, a currency strength meter, is telling you in the past what's happened. Yeah. The RSI, people say this about the RSI to me. Oh, look, the RSI is extended down there. That means the currency's come down. I know that. I can see it. It's not rocket science. Hey, look, it went up there. So did the RSI. Every oscillator on the planet will be going in the direction of price because it's telling you what has happened. Same with currency strength meters. So you could say, if I'm going to take a hedge today and the yen is really weak and the US dollar is really strong, I should be hedging the US dollar and the yen. But that doesn't tell you what's happening next. That's where we make our money. We don't make our money on where things have been. Unless you're using elastic band theory, which the currency strength meter is useful for. So if you look at the currency strength meter from yesterday, we had a massive weak yen. So what should you be doing today? Yeah, shorting everything against the yen. Yeah, because we're assuming if it's been really weak, it's probably only going to strengthen up. Not much. There's just no movement today, is there? But it's just not going anywhere. Look, it's literally symmetrical triangle contraction. So you see where how useful it is. Yeah, it's telling you that the yen has been really, really weak. So everything will be going up against the yen. But because it's been weak, it's not going to stay weak forever, is it? Or it could do. It could. It's just like an oscillator, that line. So it doesn't help you. I spent months and months and months looking at currency strength meters and strategies to trade with them. And there's a guy that makes a currency strength meter for MT4 and MT5, which is, I think it's just called currency strength, whatever. It's a really well-known indicator, and it's sold loads. And he even publishes strategies with it to trade. They're all as useful as the rest, basically. They just tell you what has happened, and the odds are 50-50 on whether it goes your way or not. Market selling off, US dollar rallying beautifully. So there's that rejection at yesterday's high and that area. This is also a Dow rejection on yesterday's high and previous day's high. They're all the same, basically, aren't they? We ain't interested. So we should see some continued strength, hopefully, in the US. Just going to close out one of each. So 2R on the S&P and just over 2R on the NAS. And the trailer's just running at 2R. So if it melts, obviously we'll get to target. If it pulls back, which, it could well just go into rotation, get out a break even on the rest. Think I may have watched that video today. Gary Economics, Gary Stevenson. I don't know who it was. Let's probably come up because it came up out of nowhere for me while I was flicking through. Look at all this crap. There he is. That's the guy. Lab Bible. How I Made Millions of the World's Best Trader. It's a really interesting watch because this guy joined. I'll put a link in the. Don't watch it now. Watch it after. But he basically joined Citibank when he was in his early 20s. He retired late 20s, multimillionaire, obviously. He was generating 100 grand a day, basically, in profits for Citibank. Literally just executing orders for customers. There's no, and he was trading, but his speculative trading, and he explains, which is really good video. And the reason I like it is because he backs up everything I come in here and say every single day. Yeah, this market moves on fundamentals. He has an economics degree. He is an economist. His job is predicting future economic movement. Nothing more, nothing less. He was using the analysts in the bank to give him a scorecard to tell him which way the direction of the economy was going, therefore the currency. And that was all he ever did with his speculative trading. Yeah, and he was really good at it. Intelligent guy. But absolutely nothing to do with any indicators, nothing to do with absolutely anything out there, but which way is fundamentals taking price. And the explanation of the desks and how banks operate internally. Yeah, so there's multiple desks executing orders, and it doesn't matter which way the price goes on the vast majority of them. What's going to happen is they get paid a commission. They make money by making money. And then there is a desk which makes money speculatively, and that is the desk that will take the orders on and off and on and off on a regular basis, which is where we get market structure from. All the big orders being placed in the market commercially, the speculative portions being removed. Profit takes. That's what I keep going on about in the bootcamp and all the time in here. That's all he does, basically. It's interesting. Multi-millionaire by the age of not long. When somebody asked me for a bit of advice on how to become a trader, I told them to go to college and university and get into banking. That's where the money is. In that same interview, he talked about how most of the money the traders make comes from commercial orders, not speculative. Yeah, exactly. S&P 500, yep, we're out. Still dropping. Going to turn on the NAS here. Might do. I'd be a bit wary about trying to long this steam train at the moment, but nice rejection wicks going in at the moment. So we've got some orders trying to come in here, but there's absolutely no reason for them. There's your pre-market low. There's no level of any interest there really on the NAS. You've got a little bit of, I mean, that is a low on the Dow. S&P is doing the same. So it might pull back. But, you know, there's definitely a lot more sellers than buyers today. Got to adjustment short term, last couple of 4-hour candles, for example, just to have some more streamlined approach to the entry. Yeah, you can. I mean, Abdi, you can look at currency strength, but if you want to know the currency strength, my whole point is, if you want to know the currency strength for the last 4-hour candles, look at your chart. Yeah, the way you tell is CAD yen has gone up. Why has CAD yen gone up? I don't know. Is it yen being weak or is it CAD being strong? So let's look at the yen pairs. They've gone up on the Aussie. They've gone up on the Swiss. They've gone up on the pound. They've gone up on the New Zealand. They've gone up on the US dollar. So what's that tell you? The yen is weak for the last 2 4-hour candles. I don't need a currency strength meter to tell me what I can see. What does those 2 4-hour candles tell you? The yen's been weak for the last 8 hours. What does that mean the next 2 candles on the 4-hour chart are going to do? No clue. It's got absolutely nothing to do with the last 4 hours of candlestick price action, or 8 hours, or 10 hours, or 1 hour, or anything. It's the past. It's gone. Doesn't help you. It helps you if it's been absolutely parabolic in one direction for ages. Yeah, because you know it's going to come up. But, you know, this is the yen we're talking about. This thing, as we know, can just go on forever. So there's many indicators that can tell you that, as well as your eyeballs. I've been testing a strategy this morning, a multi-day run strategy. I can't make it profitable. Somebody sent it to me, and basically revolves around using multiple bull days in a row. It's called the in a row strategy, funnily enough. And the premise is, after X number of up days, you start looking for shorts in the same way as you would when the RSI is extended. So it's just a variation on what I do, which is elastic band theory, just using days. And it's come from somebody that's had problems with RSI strategy. It's not reliable. So I said, well, no, neither is your strategy. And he gave me lots of variations on it. And it doesn't matter how many days up it goes. Which one do you pick? Do you use 3? Do you use 4? Do you use 5? None of them worked. So maybe you should have used 6, 7, 8, 9, 10, 11. So should we use 11? It's only done that 3 times in the last 10 years. You've had 3 trades. Well done. Doesn't matter. None of it works. It's all down to where the market's going with the banks. But I tested it. I robustness tested it. And I found an edge in a portion of them. But it's all curve fit. Not long term. How can he be the world's best trader if all he did was offer commercial orders? No, he did do speculative stuff as well. He was the world's best trader in Citibank for 1 year. Yeah. So, and he explains in the video as well about P&Ls. Yeah. So when you work in a bank, you get all the P&Ls passed around every day on how everybody's performing. So it either encourages you or makes you look for another job sharpish. But he had a year where he just absolutely smashed it. But because he had lucky economic forecasts. One of the reasons he was the top seller, the top trader that year, was because of the Fukushima nuclear plant going tilt in Japan. And at the time, he had a large short position on the yen. That's why. Was it anything to do with his trading skill? No. He was right direction at the right time. In the same way as if you had been short when the Swiss franc peg was removed in 2014, you would have made basically an absolute fortune. Nothing to do with skill. Letting the market go with you when you've got the position right. It's an interesting video. More interesting than these videos that try and teach you about psychology anyway. His salary was 36 to 39k. Yeah. And he got 400 grand bonus. Yeah. Still a good salary today, isn't it? 36, 39 grand. You don't start on that in banks now, though. If you go into a trading desk in a bank, you'll start on more than that. The analysts get paid 120k plus. They don't even trade. Do you think we could get a job in the city after having followed your channel? No. Half of what goes on in banks is luck. Half of it is known. This is what I say all the time. The reason banks make money is because they know where price is going. Yeah, you got a commercial desk sitting on £100 million US dollar transactions it needs to place today. You've got the just using his term, the short-term interest rate desk sitting on $1 trillion worth of longs on this today. You got a speculative desk there going, well, if these guys are longing the crap out of it today, I'm going to buy it. How can he not make money? Timing is the issue they have. That's it. Direction, not a problem. Imagine coming in here every day and going, right, today the pound US dollar is going short. Where shall we press the button? That's our problem. Not which way is the market going. When is the market going? That's the problem. That's the only problem we've got. Imagine having that as your only problem. And people still lose money in banks doing that. Insider trading. You can't get it wrong. Pound US dollars coming down. You've got a nice reversal alert just about to go in on the 4-hour and a 3-bar reversal. Lovely short position. Again, we got a massive drop due on this. We've been embedded all week, and we were embedded half of last week as well. So let's hope that US dollar rally continues. US dollar CAD's back to break even. We're approaching 125 ADR now on that. So stalling out on all the indices at the moment. The Dow's still pushing, but the other two are a little bit. We're going to let them run today. We might get a nice collapse. Just jumped long in the NAS for a pullback. Good luck. Afternoon, Dev. Yeah, I'll try not to overcomplicate. Yeah. The problem with everything you will find in trading is it will contradict something else. Yeah. So, whenever if you put a chart together, right, and you stick a stochastic on it, and you stick an RSI on it, and you stick a moving average on it, yeah. Just use those three. We're long only, but we had a short signal this morning, but we didn't quite get it on the RSI. Yeah. Our currency strength meter is telling us that the US dollar is strong at the moment. Therefore, I want to be buying the US dollar, but I've missed it for the last 2 hours. So I'm waiting for a pullback to get in short because stochastic signaled me, but that's telling me I should be going long, and I'm getting ready for a long entry on the RSI. What are you going to do? Yeah, you're utterly confused to hell. Yeah. The more, again, I cover this in the bootcamp, the more indicators you put on your chart, the more disagreement those indicators will have. And everybody tries to create 5 indicator systems and 3 indicators. So I've got this with that, and that works with that. So these are all lining up, which means it's a perfect entry. The odds are 50-50 on that working. Doesn't matter if you've got 100 indicators or 1 indicator, the odds are the same. Bull or bear. There's only 2 things that can happen. So the more confusion you have, the more problems you're going to have making a strategy work. Yeah, I mean, you wouldn't use these 2 together, but even using a moving average with an RSI, yeah, you've got a trend indicator with a mean reversion indicator. You can't trade trend and mean reversion at the same time. They're opposite strategies. One of them is looking to go long and stay long. The other one's looking to pull back on long moves. Yeah, so you can't have the moving average on the chart and that at the same time. You can, but the only thing you're going to be looking for is longs down here, because that's telling you that. But what if the market structure just shifts like that? All that's happening is this is confusing that. And as soon as it gets below there, you're going to go, right, I'm looking for shorts only. But for me, it's just a pullback on a long move. Which is it? I don't know. None of the indicators are going to help you determine that, because the banks tomorrow are going to do something with it. They haven't got a clue. This exists, that exists, or you exist. Your job is risk management, nothing more. And because you can't time the market, your job is scaling into a move that you hope will pan out in your favor. That's all you got. Where can we get info about strength versus weakness. Your chart. This is what this is. Yeah, this chart is strength versus weakness. Why are so many lines on the chart? I've been flicking around accounts. Let me just turn those off. So yeah, it's strength. A chart is strength versus weakness. This is the best indicator you've got on the planet. Euro is weaker than the Australian dollar. That's it. So I mean, if you know, I keep saying all the time, most indicators you'll find out there are telling you the same thing in a different way. You put a stochastic, a CCI, a MACD, and an RSI on your chart, they will all tell you the same thing. We'll do it. Look, I'll show you. Stick a stochastic on there. Stick an we've got an RSI. Stick MACD. Stick a CCI on there as well. Can't really see it very easily, but that line's going up. That line's going up. That line's going up. That line's going up. What's price doing? Don't forget Agimat. Okay, Agimat is just another Agimat is two indicators hidden in the background with another indicator placed on the top of it to be a new indicator. So they combine two indicators to make one indicator, whereas you could have just got the original two indicators for free and not bothered with the other one that draws an arrow on the chart. Yeah, these are all telling you the price is going up. I know. These are not telling you that price is going to come down. They're telling you it's gone up. The RSI has gone down because price has gone down. Doesn't mean price is now going up. It means the sellers are in charge. If anything, it's going to continue to go that way. But the longer it goes that way, the more probability, higher the edges we have of it reversing, which is where we come in to mean reversion. Yeah, but these don't help us tell future direction on price. They show us a condition in the market has been achieved over a period of time, providing an opportunity for the future that has an odds of 50-50 of playing out. That's all it's helping. All these indicators, a currency strength chart, meter, whatever, is telling you that something has done something and something has done something. Yes, the example I just gave where we looked at one of the yen pairs and I said, why is that done that? Let's look at all the yens. That confirmed that it was yen movement. If I'd have gone through the yens and they were all over the place, it would have confirmed it was the other pair that was moving. You could have one thing that just shows you at a glance all of that information. It doesn't help you because it's not going to help you determine the direction of price in the future. Hope you got out, Brian. This is a steam train today. Wondering if markets just getting ready for Jackson Hole if they're worried about Bailey. Not Bailey. Powell saying something tomorrow. Existing home sales have also come out bullish, as expected. Just going to lock a little bit more in on the NAS and the S&P. So we're just approaching pre-market lows on these. We've broken pre-market on the Dow, but we are approaching yesterday's low and the previous day's low. So we've got potential support areas coming up on all three, where we might find some buyers entering the market. Would it have been helpful to analyze euro pound before entering yesterday's hedge position? The advantage of hedging and the whole sort of premise behind it is that you don't need to, in theory, analyze because you're going to be wrong on one of them. Yeah. So you could with any hedging strategy, what you could do is turn around and go, right, I don't not really anything to analyze on these at the moment, but if you were to look at the pound US dollar, and again, this comes down to the over analysis and paralysis by analysis type theory. If I was to look at this yesterday, I would be going, I don't want to do anything but sell this. Yet I also don't want to do anything but sell that, because they are both very, very, very extended, and I'm expecting both of them to pull back, which they are doing at the moment, starting to. So what do? I've got a hedge, so I can't go short on both of them. So which one do I go short on? Which is shorter than the other is the question. I don't know. I've got to go long on one, because the whole premise of the strategy is we are playing the US dollar. We are wanting the US dollar to go crazy in one direction or the other. The relative strength of either the euro or the pound will create a positive or a negative edge, and we will make money using it. But if the US dollar doesn't move, it doesn't work, which it didn't yesterday. So you're just stuck waiting for the next US dollar move, which is starting now. So what I would say, like I said, what I would want is the pound to collapse while this US dollar rally is going on, so that this comes down faster than that does, which creates profit. And then we'll deal with the hedge again when we've got out of it. So you basically work what's called working the hedge. You're working your way out of the position in this case. But that's the theory anyway. But you could also pick two other pairs, but you've got to have the whole point of this is news trading. So the trade was taken because of that. And the trade the day before was taken because of that. The one before, the day before, worked perfectly. Straight in, straight out. That one, because it didn't move. That moved. That didn't. Nothing you can do. And then today, we've had no movement on this. We are getting movement off of this, it seems. Although it's marginal, the news. But we are getting some movement off of this. So today, whatever profit is available on the table, so for example, if this is got $300 or something there, that will go down into the bank, and probably 2/3 of it will be used to reduce the position size on that old trade there. And then we take another trade. Just wait. But like I said, this is all in development, so I'm playing it out as it should be played out, and see what the pitfalls in it are. And at the moment, it's what I thought it would be. If the news doesn't move the market, you'll probably get stuck in the hedge, because you're reliant on the other two instruments moving in your direction. If they decide both of them to go the wrong way, nothing you can do about that. I'm thinking what can happen if euro pound has a 4-day rally. So if euro, I don't know what you're hedging the euro pound against. You've got to have two pairs in a hedge. Morning, Matt. In trading, what is stink bid? I've no idea. Am I going to get into trouble by Googling this? I'm going to put in trading on the end there, because that could come out as all sorts of things, couldn't it? Stink bid is a term used in trading to describe a price that is so low that it would be unreasonable to believe something could sell, or if it were fairly valued. Stink bid, to get shares of a stock you like at a price much lower than the current market price. Basically, it's I guess the theory that it can't go any lower. It can. Tell that to the people that were buying shares in Northern Rock just before it went bust. You know, look at this. Look at what we've got going on today. A lot of people have been buying the crap out of this. Whoa, look how far that's dropped and how quickly. it's dropped that far and that quickly because people are panic selling stocks. Yeah, they're not buying them, they're selling them. Yeah, parabolic moves will hurt you. There's nothing you can do about it, and I guess that's what a stink bed is. I've never heard that term before, but Tom Hugard uses it in his book about Northern Rock when Northern Rock went bust. So basically, Northern Rock's stock price was collapsing, and everybody went, "Oof, that's cheap. I'm going to buy some of that." And then it collapsed a bit further, and it was like, "Oh, this is getting even better. We're going to buy it even lower." And then it collapsed a bit more, and right, let's have a bit more. What they weren't thinking was, why is Northern Rock's stock price collapsing? They're going bust. Yeah, do your due diligence. Don't buy a stock that's collapsing before you've looked into why that stock is collapsing. If the US dollar is screaming through the roof and everything is coming down against the US dollar, you don't suddenly start selling the US dollar just because it's screaming up. You wait for some signs of weakness to come in, some kind of reversal to show you that you got some people on your side that are coming in. And also look at the fundamentals. It's probably screaming up for a reason. Has the interest rate just gone up? Have they just told you the interest rate has gone up? Has the inflation figure just bounced? Has unemployment just come down ridiculously, lower than expected? Yeah, there's a reason the US dollar is running. It doesn't go out of the blue for no reason whatsoever. Yeah, so the people that buy the stink bids, I guess, are the people that don't bother looking into why it's a cheap price. Just got to be careful, basically. But this is what we do in position trading. That's your drawdown control. If you get into an instrument that goes against you parabolic, and it does, let's say for example that does that, I will start to cut these positions. Don't hold on and hope. Hope doesn't pay the bills, and hope doesn't make the market come down. You're not in control of this. It's in control of you. You're a passenger. Euro pound is an expression for the power relationship between the two. I think if euro pound goes down, I see no point going long on the euro US dollar. No, you wouldn't. That's totally right. Yeah, it's not the strategy that I'm trading at all. What I'm doing is a news hedge. Yeah. So the edge of news hedge trading is there's a large news event occurring on the US dollar. So when the news event comes out, it will either scream up or scream down. We don't know which because we haven't got any crystal balls that can tell the future. So what we do is we place a trade on a US dollar cross pair in that direction and that direction on another US dollar cross pair. In this case, euro and pound. So when that news release happens, it doesn't matter what happens in the market. We bank money and then we use a percentage of the money we've just banked, if it's not green, to reduce the hedge that didn't work. And then we re-hedge and wait for a pullback to exit the remaining hedge. Yeah, if you're trading the euro pound against the euro US dollar, you're basically hedging the euro. So you would do that on a euro news event. So you would maybe go long the euro pound and go short the euro US dollar. When the euro news event comes out, the euro will scream up or scream down. One will go into profit, one will go into drawdown. So you could do that. But only on a day when the euro has news. Because the whole point is we're expecting a sharp, fast move, a propulsion gap to form in one of those currencies. But what I've found is with doing this strategy, you can see these days, some of these days in here. I think it was the pound one. Pound CAD. So I haven't got it. I haven't got all the Forex pairs. That's because I've switched accounts. Pound CAD, Euro CAD. So pound CAD and the Euro CAD, basically, I was able to get out of the trade. Can't really see it on these charts, but even before the news happened. So there's the news spike there. But before the news spike came out, I had short profit on the pound, on the Euro CAD, and I had a break-even position on the pound CAD because the pound had been strong that day and the euro had been weak that day. So I actually managed to make money on the hedge even before the news came out. And then I re-hedged, the news came out, and I made money on the news as well because one of them moved up. In this case, the pound CAD moved up much faster than the Euro CAD did, or vice versa. I can't remember which it was. Yeah, Euro CAD moved faster than the pound CAD. So we managed to make even more money on the news event. But, just the way, it's literally such a simple system. It's maths. And that's the reason we do it, because we don't know where prices go. Best illustration, yeah, maybe you can save that. You can save it. Wait till the stream's finished and then you can save it. But, this is the beauty of hedging as well. It doesn't really change much, the drawdown. Once you get into the drawdown, it fluctuates so slowly because obviously you are trading. One usually goes into profit while the other one doesn't. So the hedge, as long as you've got similar lot sizing on, we're waiting for the differential between the euro and the pound basically to change. So we're waiting for euro pound to take off in one direction or the other. That will help this hedge in one way or the other. Yeah. So, it's all about just creating an edge in the market that you can extract money from, because there's no way of predicting the direction. So the only thing we can do is get into a position and extract money from that position. Yeah, we can't force the market, which is what position trading is all about. I'm short the pound US dollar at the moment. I got in short there. I've added a position there and I've added positions there. Yeah, I'm waiting for this to come down. Not in my control at all. Yeah, so I could either get in short there, take a 1% loss on my account, get in short there, take a 1% loss on my account, get in short there and take a 1% loss on my account, i.e. be 3% down, or I could be sitting here at the moment in roughly 1.5% of drawdown, waiting for the inevitable. And it's the same with hedging. Yeah, you get in. If the hedge becomes profitable on the news, you take the money. If the hedge doesn't become profitable on the news, you take a portion of the profit, use a portion of the profit to get rid of a portion of the loss, and to repeat the process. And that's all we're doing, isn't it? We need a reason to get in, but we have no way of determining where the high is, where the market will move beyond our position, or when the market will move in our direction. We cannot tell any of that because it's all in the future. So the only thing you can do is get in and wait and see what the market does. Either take the money or change your position size to a different level. And that's the same in the hedging strategy as well. You're using position trading to do that in the same way as we are in normal position trading in the hedging. We're doing the same thing, exactly the same thing. Yeah, so my average is here on these positions. If this comes down to there, I've got profit. But if that comes down to there because the US dollar has rallied, that will also have come down. If that comes down to there because the pound has dropped, that could well go up and become profitable, while that becomes profitable, and we make double the money. We're playing three currencies. It's the beauty of it. You've got three people, in effect, that can drive the profit. In theory, it's a lovely strategy. In practice, I've just got to wait and see how it plays out. How's the news data indicator going? It's not even started. Not even started. It's on my list of 1,000 things to do. That'll be a long time off. There's news data indicators out there, but not historical ones, unfortunately, which is what I want to build. But it's a complex thing. One of the main problems with putting historical news on the chart is time zones, broker times. There's the problems I have with people with the ORB and the SIH and the price action toolkit indicators. You've got to put the times in right for the opens, which will be different for you and your broker depending where you live, where your broker is, all that sort of stuff. Every news event is like that, and we have summertime changing twice a year. It's a headache, absolute headache trying to get it plotted correctly on the chart. But I'm not actually interested in plotting it correctly. I'm interested in plotting the day it happens more. So I'm interested in seeing when the interest rates were for the US dollar so that I can see what happened afterwards. So did the interest rate go up? Yes. What happened after that? That's what I'm interested in, is impact of news, not what happened on the day. I don't care what happens on the day because it's random. Price can go down when a positive news event comes out, and price can go up when a negative news event comes out. It can do the opposite. It can do nothing. It can whipsaw. It can do sideways. It's just, the news is used to execute orders. It's not used by the markets to place their directional bias. They've already done that pre-market. What they're doing is adding or removing based on whether they got it right or wrong, because the analyst's job is to see into the future. So the analysts tell them where it's going. This is why markets move up ahead of news. Yeah, it's all priced in. So I'm not interested in what happens on the news event day. I'm interested in where was the market going before the news, and did they get what they expected? If they got what they expected, what happened afterwards? If they didn't get what they expected, what happened afterwards? So we can basically come in every day and go, right, today we got PMIs for the Eurozone. The last 10 times we had PMIs for the Eurozone and we got figures which were positive across the board and the market had rallied into them, this was the outcome with an 80% edge. That's what I want to use it for. So trading news in the respect of I'm in before it or I'm in after it, but I'm not trading the news itself. I'm trading the impact of the news. So I've got all the data. I've got the whole lot is all ready to go. It's just plotting it is difficult, and also building the systems to automatically update all of this. It's not something I want to sit and do on a spreadsheet every day. Not interested. It's either automated or I'm not bothering. Too much. I've got all this automated on here. This is all fully automated. All the sentiment is all automated. So I can automating the data into the database is not a problem for me. It's automating that and then getting it in. It's got to be web calls and things with indicators, which is all a bit of a pain in the backside, because if this server is slow and you've got 50 people trying to get an update at the same time, it's just a nightmare. It's logistically behind the scenes a real headache. I remember summer last year trading was a fair bit simpler and not so squeezy. Yeah. Last year we weren't on an interest rate rally, we were on an interest rate freeze. So very different year last year to what we got this year. We've got a lot more potential news changing this year with interest rates. We're at the end of summer now. We're getting towards the end of summer. The kids are going back to school in a couple of weeks. So it is going to volume will start to pick up again. And we're going to start to go into interest rate rallies in September. So we've potentially got a pound one, a euro one, and a US dollar coming. We don't know what the CAD is doing, the New Zealand is doing, because they just sprung that drop on us last time. The Aussies not changing. So we've potentially got 4 to 5 interest rate drops coming. So it's all going to start to accelerate. Volume's going to pick up. ADR is going to pick up. If you do an ADR analysis on last year on the Euro US, So if you look at last summer, which is kind of there, and then look at where we are this August, we're not far off. Say we're not far off. This is why it's important to plot things on a chart. That was the ATR towards from September to December August to December last year. Look at the ADRs we got here. Half. We've got half the volume at the moment than we had last year, which is half the volume we had the year before. Yeah. So I mean, these are the lowest levels. This what we've had down here. This bit I've shown this in here before. This is the lowest ADR we've experienced in Forex for over 20 years. We haven't had levels down here. There is just nobody there. So trying to make any system or strategy that you've ever backtested on anything beyond the last couple of months, it's not going to work. This is totally new territory. We are starting to gain it now. Look, it's starting to pick up. And interestingly, it's starting to pick up in August when we normally go quiet. Just, you know, it's weird. It's just a weird market at the moment. It's not the norm. So we are still dropping on the S&P and the NAS, but very slow now. So inside bar just formed on the NASDAQ and the S&P. We're starting to struggle. Just going to move a little bit more profit down. Lock a little bit more in. With the historical news data, are you seeing any kinds of recurring patterns? Yeah. Yeah. But the problem with news data as well, and this is, so far I've done visual backtesting. You can do this yourself if you want to. I mean, it's a case of like, if you want to use the CPI for the CAD, yeah, there's all the dates. Yeah, happens at the same time, 1:30 every time. There's all the dates. Go back, draw a line on your chart, each of those dates, and then look at what happened before it in the week running up to it, and look at what happens in the week after it, and then look at what that was. The problem with that is this lot and this lot. Yeah. So you can look at the CAD CPI number and go, wow, for 2 weeks after it, it rallied last time. And the month before that, for 2 weeks after it, it rallied. Was that rally caused by the CAD CPI, or was that rally caused by, and you're looking at, for example, the CAD yen, was it caused by yen strength or weakness when Ueda spoke the week after, and when the Japanese import-export orders were released the week after? Yeah. So when you're trading Forex, obviously, if we use US dollar CAD as an example, if you look at the news and what impact has been happening on the news, it could be the Canadian news that caused it, but it could be US news that caused it. So you've kind of got to plot all of it on the chart and look at what happened. So if the US dollar CAD, for example, did that on CPI, that pullback was possibly caused by US dollar weakness, i.e. a bad US dollar PMI figure or a bad US dollar something else next week. So consumer confidence figure. And then that rally was not caused by the CAD. It was caused by the GDP figures for the US dollar coming out and being massively bullish. You could look at it and go, wow, after the PMI on the CAD, it went mental. It didn't go mental for the CAD reason at all. It went mental because of the US dollar. So it's impossible to really look at individual instances, which is why I want it all plotted on a chart, because you can't just use one instrument. You can't look at it and go, right, every time CPI is bullish, it rallies. It's not going to be because of CPI. It might be, it might not be, but how do you tell? You've got to look at the news events after it, and also you've got to look at the news events before it. If the US dollar CAD is rallying before the CAD PMI for 2 weeks, what happened 2 weeks ago? Anything? Oh, the US dollar CPI figures came out and they went up by 0.5%. We were expecting 0.25. That's why it happened, not because they were anticipating a CPI increase for the Canadian dollar. So you've got to have the full picture, which again makes it a headache, if you see what I mean, because you will have stuff plotted every day. Something, we look at the news every single day. It's the whole premise of what I do is, what have we got? What's going to move the market? I'm going to be in positions. What's moving it? Yeah, that's, it's a very difficult thing to look at. A calendar event page is launched. What's that? Something new. Ooh, what's this? Ooh, that's interesting. I'm just building something like this. Good old Forex Factory beat me to it. Right, so there we go. So this is all the releases going back. I've got all the releases going back to 2013, so they've got pretty much the same data. I didn't get my data from here; I got it from somewhere else. But what we're interested in is when this all started going down, what happened to the euro? Yeah, that's COVID, obviously. But yeah, that's interest rates changing. You can see on here what's going on in the market, can't you? But it's more of a case of what happened to the currency pair. What they need here is a plot of the currency pair underneath it. That'll be a monthly chart. Oh, they actually go back further than mine. My data only go back to 2013, so they got way more data than me. Interesting. So you got the forecast figure there and the actual. That's interesting. Good to know that. That's going to be handy for looking at in here. So especially for things like CPI. So this is the type of data that I want to plot. Shows you, what the forecasts are and where it hits and misses. This scatter plot here, which is the little orange bits, shows you how wrong they are most of the time with their forecasts, which is why we watch CPI like a hawk, because they usually get it wrong, which gives us big swings, doesn't it, normally? But what happened to price on each of those days and after those days? Stalled out last 25-30 minutes on both indices, on all indices now. So that leg looks like it was it for the moment. So small pullback starting. 4 o'clock. Sorry, but I don't know if you replied to my question I posed before. Where can I get the info about the strength versus weakness for Forex pairs? I answered that. Look at your chart. Or Forex Factory, Financial Juice. So they publish every day. They publish a currency strength meter, if that's what you mean. It's usually about 5 o'clock. So it's in the morning. No, sorry, that's this morning's. That's not this morning's, is it? Oh, yeah, that was this morning's one. Yeah. But like I said, this is just showing you what's happening on your chart. Yeah. We said, someone said the yen's been coming down for the last 8 hours. Yep. You know that because everything on your chart has been painting for the last 8 hours bull candles. This line is just confirming what you can see on your chart. So this is as of 3 a.m. this morning. So what it's telling you was from midnight to 3 a.m. in the Asian session, the yen was weakening. So what do you think every currency pair was doing this morning in the Asian session, early doors? They were all going up against the yen because the yen was weakening. But that doesn't tell you what's going to happen at the opening bell in London. It could just do that, and it will have. If you published another one of these now, this will be down here because everything is rallying against the yen, and it has been for the last 8 hours. So that's definitely been coming down. But I can plot this myself because I can see on the chart what's happening. It's just another indicator, and a really complicated one that will confuse the hell out of you. So let's say, for example, now, one of the ways you trade this is a really bad day to explain it, but one of the ways you trade it is you pick whatever the weakest pair is on this chart, and you pick whatever the strongest pair is on this chart. So right now it's the Swiss franc and the yen. So you would say, right, the Swissy has been rallying, the yen has been dropping. There is a high probability of some kind of mean reversion happening. So what you would do is you would short the Swiss against the yen. So you can use it for a mean reversion tool. But if the Swiss continues to rally today and the yen continues to drop, which is what's happened, you're just going to get it wrong. Because what this is telling you is what's happened, not what's happening. No use. Like all indicators, it doesn't help you. It helps you in, it's a quick reference for seeing what's happened. But the best thing you can do to train your eyeballs to trade is to scan through every single one of these every day and look at it, because you will just see price patterns unfolding over and over and over again. This market reverse alerts indicator is on here to indicate instantly the bears are in control. I know that, but that indicator, if you're not sure, confirms that for you. A moving average on a chart will be going up. So if you look at this pair, yeah, the daily moving averages at the moment, price is above the daily moving averages at the moment. I can tell that from that chart without looking at this chart, but that's through experience, not through any kind of magic. But the price is above the 24 and the 72. That doesn't mean you buy it. It's been coming down for 2 days. Yeah, it's telling you what's happened. Price has been pushing up. I know that. I can see it on my chart. Every indicator tells you what the past is. This tells me price has been rallying. I can see that. How far and how long and how fast, now I'm interested. That's more difficult to see on a chart, which is where indicators come in for telling you the condition of the market. But which way it's going, they don't know, do they? Which is why currency strength is something you will get stuck in. If you follow that route, same as Elliott wave. I've talked about this before. Elliott wave, harmonic patterns. If you go down those routes, you'll be in them for months, possibly years, trying to find these harmonic patterns that are painted at random in the market. Yeah, I can make up a new harmonic pattern and find it 10 times and go, here's Lee's harmonics. Yeah, but I will just be finding random price movement that nobody else has spotted before. Not going to help me. Although much slower and less trades, daily 80-20 levels on RSI 10 is also something I have EA set up to take. Yeah, I mean, you're not going to get many signals, are you? You had one there. 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 Can't see, it's behind my head. So, yeah, 100% strike rate. 1, 2, 3, 4, 5, 6 trades in 3 years, 3.5 years. Position trader EA will do all that for you. So with the market reverse alerts EA. But you know, that trade there was November 2022. Oh no, there's one there. Sorry, I missed that one. You had one in May 23. We're now in August 23. So you've waited over a year for a signal. But if you want to pay your mortgage off, go in with 10% risk. There's a million ways to make money in this market with indicators. And you can fine tune indicators to be incredibly accurate. But you are just curve fitting to what's happened in the past. Yeah. So, yes, it's incredibly reliable, but you've got a signal. The signal started there. So that was a scaling. It was out within a month. You would have been out on that. So that was a multiple scaling. You would have held that for 2 months. That wasn't great. That one. That was good. That was easy. That was COVID. Nobody survived COVID. Well, he did survive it. Just nobody survived it unscathed. Put it that way. So yeah, it's great. But risk. It's all you've got. Risk. You've got to be careful with your risk on it. This is why I've switched over to RSI 10 on the 4, because I just and above the 80 level. I want to get in later at the moment because we've seen volatility pick up. We've come out of the lowest volatility period we've had. Look at what happened to the S&P when we went through that bear volatile market. After that bear volatile market, we took off. Volume picked up dramatically on the bull side. So we've gone through the kind of this calm bit. Then we got the storm. This is the calm bit we've just literally been through in the last couple of months. So I think it's all going to kick off. So you want to be adjusting your caution levels when the market's doing that sort of thing. Oh, manually move my stop loss. Look, typical. Still $600 pounds. Can't complain. Baby pips have something called market milk. Yeah, I think they. I've not really looked at that. I have seen it before. Have they released? It's just commercial now. So yeah, so there you go. So that's your currency strength. The yen is weak. The pound is strong. I know. I can see it. It's painted all over my chart. But there, and this is the takeaway from it. Yeah. There, it was telling you that they were both neutral. Yeah. Looks like a face. Yeah. Only now is it telling you that the yen is weak and the pound is strong because it's happened. Yeah. So right now, if you look at that baby milk, the New Zealand dollar and the Swiss franc are the sort of most neutral of the two. That tells me that we're seeing that sort of price action probably on the New Zealand dollar Swiss. Yeah, not gone anywhere. I know that. I can see it. I don't need to look at that thing to tell me that this thing's going sideways. If this goes like that and like that, when I come back and refresh that chart this evening, it will tell me that the New Zealand dollar is weak and the Swiss franc is strong. I know that because it's happened. Yeah, this is what I mean by it's no use. It's telling you what's happened. The only use for this now is I want to be shorting US dollar against the yen because it's rallied. What comes after a rally? A pullback. So it's showing me that there's a mean reversion opportunity on the US dollar yen to short it. Yeah. That's what I'd be looking for. But it hasn't even got to ADR yet. You know what I mean? It's no use. It's not even stretched. It's just gone up. Hasn't got to ADR. RSI is nowhere near extension. The relative strength movement, one of them might be strong and one of them might be weak, but the relative strength between the two of them is nothing useful. Can't help us, can it? Price action is the most useful thing there. Look. Long wick, sellers, long wick, sellers, long wick, sellers. If we don't break that high, we've run out of buyers today, which is what I was saying. I mean, reversion opportunity, because it's done it. Now we're looking for the pullback. And after the pullback comes the pop. After the pop comes the pullback. After the push. That's what it does, isn't it? Market structure. So it is useful in that respect. If you want to go, right, I need something to short today. That's it. But I would rather use the ADR reversal indicator because I want it to go beyond its normal strength, or I want to use RSI to show me it's been strong for a prolonged period of time. The chances of that are higher. When it's above there, the chances of that are higher. Just because something says it's strong and weak doesn't give you an opportunity because it's not necessarily stretched, is it? That's what we're looking for. We're looking for the banks and institutions to be extended, ready to take the profit on the move that they've just created. They all do the same. They all do the same thing. There you go. They do their own version of it. Look. You need to be able to change the time of it. My God, look, trend strength matrix. It's all of this, like the trend momentum, the US dollar, bearish. It's rocketing. How's that bearish? It's screaming up. We've just been looking at it. It's screaming up. The stock market's coming down. It's not bearish, is it? People are coming on here going, sell the US dollar. No. Just wrong. It's all wrong. That's probably retail, isn't it? That's showing. I don't know what that's showing. I don't even want to get lost in it because otherwise I'll become a system hopper. You can change the time on the right. Oh, yeah. You need to be able to change the timing on it, basically, to be. You know, it's the same as anything, isn't it? All indicators. I keep saying this. All indicators are telling you the same thing. So a currency strength meter is telling you what's happened. An ADR indicator is telling you what's happened. An RSI indicator is telling you what's happened. It's not what's happened that's important. It's discovering the opportunity that's important. So all indicators can be useful in that respect, that they will go and tell you to do something. But that bit is the important part. And this is the bit that everybody's trying to get right. They're trying to get the entry right. And they don't realize it's not the entry that makes the money. It's the exit that makes the money. You can get in there and then get in and still make money. You don't have to be right. You just have to be right at some point. And as long as the market goes up and down, there's a probability of you being right. Yeah, you can be wrong for days. As long as you're right at some point, that's the key thing. As long as you control your risk along the way. So ADR, in my opinion, is a much better indicator to use than currency strength, but because it tells you the relative strength between these two is getting close to what it will do on average normally. And if it does that on average normally, it's probably not going to do much more than that because the norm is 23% of the time it doesn't get beyond that level. So the edge is short. Whether the edge plays out, again, has nothing to do with the ADR indicator. It's giving you a condition. RSI gives you a condition. You get a signal to enter, but the signal and the condition do not make the money. They make the entry. It's a reason to press a button. That's literally it. Currency strength is a reason to press a button. It doesn't help you make money. What about euro pound? What do you want to know about euro pound? It's an ADR extension. There you go. So it's a long. 3-bar reversal, long, M5 reversal alert about to kick in. So there you go. There's your condition, ADR extreme. There's your reversal alert, signal. There you go. Now what are you going to do with it? Where is it going? Doesn't matter, does it? You're in. So you press the button and it either goes to there and you get out, or it flags and drops. If it flags and drops, you plan your entry. Enter there, average there, big drop, extended on RSI, exit. Yeah. Doesn't matter whether you get in because of that, and it doesn't matter whether you get in because of that. You don't control what happens next. They do. You control how you move the price or when you press the exit button. And if you press the exit button at a loss every time you take a trade, I know what's going to happen to your P&L. So do you. Change that bit. Let the market make you the money. Extracting the money out of the market. So I said, that's what it's about. It's not about getting it right. It's not about getting the entry right. It's not about picking the direction. It's about exiting with a profit. Extracting cash from market movement, which is random. All you've got. But yeah, it's a nice looking long at the moment. It's either going to do that or it's going to do that. Unless you've got a crystal ball, I can't help you. But yeah, long for me. It's a long on the 4 hour as well. I'm going to close Aussie CAD out. Only reason is because I've got New Zealand CAD short as well. So the Aussie and the New Zealand move together a lot of the time. So I'm just going to take that one off. And that leaves me the New Zealand CAD on. I was just going to look at my exposure on the euro. See, I don't really want to take this long personally because I've got exposure short on the euro and I've got exposure on the pound as well. Oh yeah, pound US dollar. I could have sworn I just clicked on that and it didn't load. So yeah, I'm short the pound and I'm short the euro. So if I go long on the euro pound, it's not really a problem. It means I'm double shorting the pound, but I'm hedging the euro because I'm already short the euro. So for me, that trade doesn't really fit, although taking it isn't a problem because if it does do that, my other euro trade goes into drawdown and this one turns into profit. But the euro can't go both ways. So, but it's still a good opportunity to get in. The only thing I don't like about it is that propulsion gap is not actually part of a break. That one is. And you've got this whacking great void here with no price action apart from that high, which has been invalidated already. So for me, that is the ideal spot to long it, 175 ADR. So today, if it does that and then tomorrow it ends up down here, that would be a lovely long. That will still be extended. And you're looking for a pullback into that propulsion gap. Better trade. But equally, if you really want to get into it here, and there's good wicks to the downside, look. On the 4 hour. Yeah, so we got big sell. Buyers took control. Buyers took control. Yeah, they haven't managed to break the highs yet. But on the 5 minute time frame, you have, or you're just about to get a reversal alert in 2 minutes. That closes up there. That's a bullish reversal. And if it doesn't work, you've got a plan. You're long there. and your backup is 175 ADR. So you take a second entry when you see some price action coming off of this level here. Your average is there. You're looking for it to trade back up into that area there. Possibly. It may come all the way down into the last 3-week low. And if it does, get another trade on down there. You move your average down to there. Then you're looking for a pullback on that leg. Even bigger. Odds go up. The whole premise of it. We don't know where it's going. They know where they're going if the other banks and institutions play ball. Just quickly before I go, watching that video earlier, you know, he was also talking about how they execute trades. You know, and I've said it in here before. There's a lot of what's called OTC transactions done within banks that never come on these charts, that you never see. And it's a case of picking up the phone and saying, I've got 100 million of this to execute today. Have you got 100 million to go the other way? Yes, brilliant. Let's just do the deal. How much do you want for the exchange? Well, I'm going to sell it here. I'm going to buy it here. Okay, brilliant. You make the money this time. Next time I want it back. Scratch my back, I scratch yours. A lot of that goes on in interbank. So when that guy's saying he's executing $1 trillion worth of orders a day, not all going through here. It's another important part. Yeah, if there's a massive bullish stance on a currency and you don't see it in here because the fundamentals are saying this thing should be skyrocketing, it doesn't mean they're not buying a load of it. It's just not happening here. Pound odd extended on the hourly plus fundamental bias. Yeah. Good short. Nice level. 3-bar reversal forming. So in the next 35 minutes, if that candle closes bearish, that's a 3-bar reversal. Push, pause, pull. Bias is right. Resistance. The only horrible thing about this one is if it doesn't work out, that's where you're going. So you've got to plan for a 4 ADR move, 3 to 4 ADR move against you. Yeah. But you got divergence on your RSI. Looks good. But there's clear air between the break and the resistance. So there's not really anywhere there price is going to hit. It may well just do that, but it won't be because of orders ready to go. There's a little bit of resistance and support there. But accumulation. If you were trading market profile now, you'll see a bump there. Who knows? Either works or it doesn't. Right, so I'm out of those. Oh, could I have placed my trailing stop loss at a worse position? Literally to the pip. Literally. Unbelievable. Anyway, meh. So last week's high. You got yesterday's low. So there's more downside on these two. This one looks like it's steamrolling last week's high. If it breaks last week's high, you got a flush on your hands, potentially for a few days. So time to go a little bit bearish potentially on these. We seem to be having a nice run on the US. So, all right, I'll be back tomorrow, 8 o'clock, 7:45. The only reason I'm pulling that face is because I'm going out tonight. So that's the plan. Whether the plan plays out, you'll find out in the morning. I might well cancel that one. I'll see what time I get in. Anyway, so that's tomorrow morning. I'm not here Monday. So Monday morning, I won't be here because it's a bank holiday in the UK. So just bear that in mind. So Tuesday next week really is first day of any news, which is look, there's no news next week. It's going to be a crap show next week. There's nothing happening. Good. So yeah, I will see you hopefully tomorrow. Other than that, have a good one. I'll be in Telegram or Discord if you need me. Other than that, I will see you next time. Have a good day.